Okay, boys, moving on. Working 14. Okay, and this is associated with note VI. So buildings are to be depreciated at the rate of 2% of cost per annum. Okay, and at the start of 2017, the company revalued land and buildings at 1 million, and the land element of this new value is 200 grand. This figure has yet to be reflected in the accounts. Okay, so if we're looking at the fact that the land and buildings, okay, were revalued, okay, at the start of the year, all right, what we want to look at here then is we want to look at the depreciation charge for the year. Okay, so that means we're going to work off the figure of 800,000 for buildings. So this is your depreciation, okay, on buildings. So that would just simply be 800,000 multiplied by 2%, and that should give you 16,000 euro. I'll just double check that now, I'm not making a silly mistake. Okay, so that 16,000 euro then is a admin expense. Now, they're telling us that this figure for the revaluation hasn't been reflected in the accounts yet. So what we need to do is we need to do a revaluation reserve for this. Okay, so working 15 then would be revaluation reserve. Now, because the revaluation was done at the start of the year, okay, we're working off the figures from the start. So let me see here. Land and buildings at cost is 850,000. Okay, and the accumulated depreciation of land and buildings is 55,000. So what we take into account here is that at cost, okay, was 850,000. What I'll do is I'll subtract the accumulated depreciation on that, which is 55,000. Okay, and that will give us 795,000. And then they revalue it at the start of the year up to 1 million, which means that 205,000 was your revaluation reserve, which will go into your finance buy, and this here will go into your fixed assets. And so too will this figure here, 16,000, because that's your first year of depreciation after your revaluation. Okay, and that is taken care of VI. Okay, the next thing then we have here is your bank reconciliation. Okay. So again, here we're looking at our own bank, and we're looking at our bank statement. Okay, and our own bank, if we go back to the trial balance, we will find that our own bank account there was a asset of 37355, okay? Not an overdraft, it was an asset, so this money was in our bank account. And then the bank statement, okay, has arrived showing a balance of 44, okay, 375, which was also a positive figure. All right, so it tells us that investment income of 3 grand had been paid directly into the firm's bank account. So that would be a positive 3 grand. Okay, because it's going to increase your bank figure. But we need to go back then to our investment income, as we pointed out this earlier. Okay, if I can find it. There it is. Okay, so we have received an additional 3,000 unknown to ourselves, coming straight into the bank account, which means that €1,000 now is what's due to us, so that's the current asset. So that's that taken care of. Okay. Number 2 then in this note says a direct debit to Electric Ireland of 950 has not been recorded in the firm's books. Okay, so that is going to be reduced 950. Okay, now you can decide to put that direct debit to Electrical Ireland in as ESB if you wish. Okay, that's completely fine. What I would do is I'd probably just add it into salaries and general expenses. So I'll come back up here to salaries and general expenses because I know it's opened. Okay, there it is there. And what I would do is then I would add in, okay, an additional 950 here. So it'll be 370 plus 950. That will give me a new figure now for wage and salary expenses to be 174320. And I believe that's that closed off then. And as we know, that's an admin expense. Moving on then, a check for 1,200 issued to a creditor has not been presented for payment yet. So that means that the bank isn't aware of it, but that should be down by 1,200 because they will eventually cash that check. So a payment from a liquidator was received directly into the bank. This represents a first and final payment of 20 cents in the euro in respect of a debt of 17,500. So we multiply that by 20%. Okay, that means we received 3,500. Okay, that means that that debt of 17,500 is now gone. Okay, so what we'll do is go back up to the debtors. Saw it up there somewhere. Okay, so the debtor is there. We're going to reduce that now by 17,500. I'll leave the debtors open just in fear that there's another working to do with it. Okay, and then I must open up a new working down here, and this will represent bad debt. Okay, so as I stated, the debt was 17,500, and 17,500 subtracted 3,500 that I received in a check is 14,000. And that's a selling and distribution expense. Okay, and then finally, a check for 360 paid to a supplier had been entered in the books, okay, as 630. So we told our bank account that we paid more than we actually did. So 630 minus 360 will give us a difference of 270. So what I'll do is I'll add that 270 back into my bank account, okay? But now I must go back to my creditors, okay, and increase my liability because I thought I paid off more than I had. Have I opened up creditors yet? I don't believe I have. No. Okay, so working 18, I'm going to open up my creditors. So I'll go back to the trial balance and I'll locate my figure for creditors. Okay, and it's 71,950. Oh, it's a liability. Okay, I need to increase my liability by 270 as I thought I paid off an additional 270 that I had not. Okay, and that is that taken care of. Now, moving on to the next working there, which is record for your goods in transit. Okay, so these goods in transit, we are receiving them. All right. So no record have been made in the books for goods in transit. The invoice for these goods have been received, showing a recommended retail selling price of €30,000. Okay, which is cost plus 25%. That does not mean we spent €30,000 on it. That's just a recommended selling price. So 30,000 divided by 1.25 will give us €24,000. So let's go back to your closing stock. We're going to add in an additional €24,000. Okay, let's go to purchases. And we're going to add in an additional €24,000. Okay, and we go to creditors. We'd add in an additional €24,000. Sorry, it's not creditors. Okay, we are set. No, hold on. Sorry, it is creditors, yeah. Excuse me. Okay, yeah, because the invoice for these goods has been received. All right, so that means we have not paid our creditors yet for it. Okay, they would be the VI, VII, and VIII workings done.